Hello and welcome to my channel, The Day Tradestor. Through my channel, I am hoping that I can inspire people who do not have any trading accounts, specifically retirement accounts, to possibly open them. Whether that's a Roth IRA or a traditional IRA, it is definitely much safer if you open a retirement account than try to open a regular cash trading account. And through my videos, I hope to also help you to see your future through different lenses. There are many people out there, mostly blue collar, who do not have a retirement account, and they believe that they can't afford a retirement account, and they believe that they will not ever have any type of wealth. They work for companies that do not offer any 401ks or retirement plans, and no one has ever actually told them that by saving a little bit of money every week that they absolutely can change their life if you're putting that money into a retirement account. If you can afford $25 a week, that would be great. The overwhelming majority of people who actually work, even if they're making minimum wage, can most likely afford $25 a week. Most people splurge on very short-term conveniences that can easily far exceed $25 a week. But if you truly believe that you can't afford $25 a week, $1 a week, something, just get your retirement account started. No matter what you're able to put into your retirement account, at some point you will be able to see your future through different lenses. The number one wealth creator in the history of humankind has been the stock market. There has been no other market that has created more wealth for more people. Not everybody can be a business owner. Not everybody who opens a business will actually run it and be profitable. But right now in 2025, if you work, you absolutely have access to the stock market, and you can open up a retirement account through the broker of your choice. You got Charles Schwab, you've got Robinhood, you've got Fidelity, Webull. There's so many others that you can choose. But no matter what you do, if you're working and you're making money, I certainly suggest that you open a retirement account and get that started, because again, that is the number one way that more people have gained wealth. If you're new to my videos, thank you. Welcome very much. Rather, thank you very much and welcome to my channel. If you're new to my channel, some of this may be a little confusing at first. At some point, I will be putting up educational videos to explain what I'm actually doing, what my strategy is, why I'm making the decisions that I'm making. So I hope you hang in there, and I hope you come day after day. And I hope you look forward to the possibility of growing your retirement account along with me and my accounts. If you have been watching my videos, I have changed a few things up. I opened a new account and I funded it with $25. And for now, the first part of my videos is going to focus on this particular account, because my primary goal is helping people who are currently do not have a retirement account to possibly open one, and they can follow along with me as I invest $25 a week. They can possibly do the same thing, but they'll see that there is an opportunity for them to make money, no matter how small it is, and start growing their wealth. So I funded a new account today. It currently has $25. That's my first deposit for this $25 a week account. And here is my Charles Schwab summary of my current account balance and my current positions. All it is cash, as I said, $25. And I'm doing this so I can be more likely to reach and inspire somebody who doesn't have an account, as opposed to what my previous videos were. I'll still be making videos of that. That'll occur after this section. At some point, I'll probably break it up into 2 video streams. But for now, the videos will be the first part on the $25 account, and the second part will be back to what I was doing for my full account balance for the account that I use in my videos. So starting with a visual representation using the daily chart or the daily time frame, you can see, we'll zoom in, you can see the S&P 500 has had a long down day today. It actually it is probably the second, why isn't it zooming out? There we go. Right now, it is the second longest down day of the last 3 months. And today's day, the bears have wiped out a little bit over a month of gains. And we started out the day great because NVIDIA had great earnings report yesterday, and we opened up, we gapped up almost $95 from yesterday's close. So started out great, had great potential for the day, but then it just ended up going down, and we are still in a downtrend. So for today, at least, the bears have control. As an investor, especially in this account, I'm mainly a large cap investor, and I pretty much stick with most of the stocks being part of the S&P 500. That makes up about 3/4 of my overall portfolio that I've been working and buying and selling stocks from, with the other 25% being stocks that will typically go up over time. They are a little bit more growth stocks. They're a little bit more risky. They might have a good possible future as sustainable companies that will have growth over time. So if you're new to the channel, I hope that through my videos, you will see the benefit of trying to be an investor and not a day trader. And I hope you see the benefit of investing mainly in United States companies through the S&P 500. Now, currently, I do not have a lot of stocks that are in my pool of stocks that I choose from that are $25 or less. And of those stocks that I have, there's really only one that I'm actually able to buy that's actually been going up and is still going up and is possibly going to be going up over the near future. And that is SVM, Silver Metals Corporation, SVM. It's currently $6.28, but at least it's something that I can purchase. So at $6 and we'll just say 30 cents, it looks like I'll be able to purchase 3 shares of SVM. Okay, that is the very first purchase in this account. We have 3 shares of Silver Metals Corporation, or Silver Core Metals Incorporation. So I'll go ahead and add this to my watch list. Silver Metals Incorporated, we've got 3 shares, and we've already lost 29 cents. Now, as an investor, I'm hoping that you will learn that you're much better off buying a stock and holding on to it until it becomes profitable. I hope that as a new investor or somebody who's trying to invest, that you do not use your accounts as a day trading account, because over 90-95% of all people who try day trading, they lose money. They don't even come close to being profitable. And out of all of the day traders, there's less than 1% who actually become rich. You can see silver is going down. They've gone down from 670 to 631 so far today. That's a 40-cent drop. But overall, the last 3 months, they are up from $4.34. And one of the reasons that they likely will continue to go up is because computer chips and AI, the demand for computer chips. Silver is used in the production of computer chips, just like gold. Silver sort of runs congruent with gold. As gold is going up, sometimes silver goes up as well. So as an investor, we are not interested. I am not interested in the performance for the day, the week, or even the month. I'm interested in performance over several months and even years. Now, as an investor or somebody who's thinking about becoming an investor and opening up an account, the S&P 500, SPX is the symbol to see the S&P 500. That is the safest bet, if you will, to invest in. And one of the best ways to invest is through an index. The SPY is an ETF that is indexed to the S&P 500. That is currently $656 to get into the SPY. Now, historically, the best thing to invest in and the safest thing is the S&P 500. Historically, it goes up an average of 10% a year. Now, that's not a constant every year. It goes up 10%, might go up 30%. The last 3 years have been great. We had almost 30% 2 years ago. We had 20-some%. We're at almost 20% this year. But it certainly can go down for a couple years. There are red years, but overall, the average growth for the S&P 500 in the previous 100 years is 10%. So if we want to get into the S&P or SPY, this ETF, it is a great ETF. It's one of the largest ETFs. It is the largest S&P 500 ETF. And I'm typing into my Google search to make sure that is accurate, and it is not. The Vanguard S&P 500 ETF VOO is the largest. The second largest, so VOO is $603. Next is the iShares Core S&P 500 ETF, and that is IVV. IVV. And that's 659. And third is the SPY. Now, one of the benefits of having these is all of these, I believe, pay dividends if you're invested in these. And all three of these, along with the many, many other S&P 500 ETFs, they are trying to directly track the S&P 500. So if we were to pull up, if we take a look at SPY right now, and we look at SPX, which is the actual index itself of the S&P 500, you'll see that there's really no chart change. And if we look at VOO, because they are trying to mimic the S&P 500, there's really no difference. Now, the least expensive ETF that we can purchase is TWOX, TWOX. So tomorrow we might be able to purchase into the S&P 500. You can see that there's a similar appearance to the S&P 500, to the index. And there are dozens of ETFs of various leverage amounts. This one is not a leveraged account, which means it's a one-to-one. So tomorrow I'll take a look at this chart, and we will see where the, I'll take a look at SVM, and I'll see where it is. And if we're able to make a profit, then we will sell, and then I'll buy into the S&P 500. This is the safest way to invest. And as a new investor, you want to try to be safe. You don't want to try to purchase individual stocks, because the volatility of individual stocks is far greater than the volatility of the S&P 500. I am interested in gaining wealth over time, and I'm hoping that I can inspire you to do the same. And I look forward to making videos every day to show what I'm doing within this particular, the $25 a week account, so you can see the growth occur, and then you may want to actually copy it as well. Not copy my exact trades, but copy the intention of gaining wealth over time by investing. All right, so that's it for the $25 a week portion of the video. I'm going to move into my regular swing trading video and show you what I've been doing on one of my other accounts. All right, for those of you who have been watching my videos for a while, I have changed my strategy. You've heard me talk about it for quite a while. 2 weeks ago, I did a little bit of research, and I found that I am buying and selling stocks too frequently on this particular time frame using the 10 and 20 crossover. Before, I would look to buy every time we had a 10-day moving average cross over the 20-day moving average, and I would look to sell all of the stocks when we had the 10-day cross over the slow in the downward position. However, with many stocks in this 5-month bull run that we've had, I would sell out. For example, in this particular situation, I might have sold some S&P 500 stocks, but then I bought back in. And then, however, this next cross that we just recently had, the cross is lower than my purchase point. I also have been buying and selling when price crosses both above and below both the fast moving average and the slow moving average. So if I go to another stock, let's just take a look at Tesla, for example. If we look at Tesla, you would see that on the daily chart, it's taking a while to zoom, I would buy in at this particular cross, and then when price moved down below the fast moving average, why isn't this working? There we go. So when price moved below the fast moving average and we had a continuing candle, I would look to sell some shares of stock. And then in this particular case, not in this particular case, but when we had price move down below the slow moving average and we had a continuing candle down where price was lower, see if there's an example here. We don't have an example here, but we do here. When price moved down below the slow moving average and we had price on a continuing candle lower than the cross, I would sell there as well. But when price turned back around, like it did in this particular case, since I have a strategy of not selling stocks at a loss because I am acting as an investor and I'm in it for the long term, I would end up holding bags that stocks that I bought at a recent cross above the fast moving average or above the slow moving average, just for it to turn back around, when if I had just not sold so frequently, again using Tesla as an example, there are many, I have dozens and dozens of examples of this currently, where if I had just sold maybe one book of stocks or a few shares and didn't have any other opportunity to sell until we actually have another time frame crossover, which is what I'm looking at here. If I come into my day Tradestor, my new chart that I'm trying to figure out how to implement efficiently, you can see, we'll go through a couple stocks. You can see where Box, it's a choppy stock, and I would have bought Box back here. I would have sold here, which is lower, or I would have looked for an opportunity to sell Box, which is lower than my purchase price. So I would have been holding bags here. Ultimately, I would have been able to sell some of these. I would have bought in around here, but then I would be holding these bags again. However, if we look at the, this is a 3-day chart. So this chart is on a daily time frame. This is on a 3-day time frame. And if we look back, I would have bought here and I would have been holding bags until I might have been able to sell some of them here, but I wouldn't sell because price would have been moving up. So price fell again. I'd still be holding these bags that I had back here. Price eventually went back up. I eventually would have bought more, and I would not have been able to sell some of the bags that I had back here because this cross is already lower than my purchase price. So I would have done a lot of buying and selling on the daily chart, where the 3-day chart, it's much less work. I'd still be holding bags from way back here from a year ago. This is a year. So when we're looking at this chart on the daily chart, that's a 3-month chart. When we're looking at the 3-day chart, this is a full year's worth of price action. Box isn't the best example. Let's go to Apple. So here's an example. I had purchased stocks back here. I sold when price moved below the fast moving average here, right? And then I bought back in. So when I sold down here, I bought back in at a higher price. So I lost that amount of gain, which from 227 to 236, that's $10 per share roughly. And then I would have bought more stocks here, and then we had the run, and then I sold out all of the stocks here. I sold all of the Apple shares because we had a fast moving average completely cross over the slow moving average, and then I bought back in. So I'm adding the 3-month time frame as a further confirmation on whether I might want to sell or buy in any particular situation of the stocks that I'm looking at. Another problem that I had, if we look at GFS, I believe, if I remember correctly. So if we look at the monthly chart, so this is 1 year, 2 years, we're looking at almost full 2 full years, actually 2.5 years, that GFS has been going down. It started going down from $73, and I purchased stocks. These are $45.03. So I bought these right around $45. So I bought on the old strategy just based on the daily crossover of the 10 moving average over the 20 moving average. It went up, so I bought in. However, on the monthly chart, it was going down. If we zoom in here, I bought somewhere around this point, but on the monthly chart, it was not a good idea. So this is a recent discovery that I've made by doing more research, trying to become a little bit more profitable, put my money to better use than what I was doing. As an investor, I have no problem holding GFS, but it wasn't the best purchase to buy just on the daily crossover. I should have confirmed on a larger time frame. Now, several months ago, I did find this several months ago. This wasn't one of the things that I did 2 weeks ago trying to improve my strategy, but it was already too late. I had already purchased the GFS shares, and since I try not to sell shares at a loss, I'm holding these bags, and I will be holding these until price turns around, if indeed price does turn around. So I make mistakes. I'm not an expert. I'm just an average Joe out here. I'm profitable with this particular strategy. I'm always looking for ways to improve my strategy, but I make my videos because I am profitable. And if I can do it, you could do it. If I could take my tiny little man brain and I can make profits every day by swing trading my long-term holdings, then I believe you can too. So we'll take a look at another, just a few more stocks to get an idea. Hopefully you can see all of these charts broken down. Let me know if you can't see the charts. This is my first time recording, so when I review the video after I post it on YouTube, I'll take a look at it and I'll be able to see if these are easily recognizable or if you can see exactly what's happening in my charts here. So if you look at Costco, I bought Costco back here. I would have sold out at this cross. I would have bought back in, but you see how quickly it turned around. So I've been holding Costco from $1,060. So I bought even long before here. I bought and then price turned around on me and price quickly fell below my purchase price. So I didn't buy in here because I'm already maxed out on my Costco shares. With Costco, I max out at 4 shares. But an example would be if I was able to sell, I would have sold at this cross. Then I would have bought back in on this particular cross and then price turned around. So I'd be holding these bags. And if I was able to sell these at a profit, then the same thing happened here. I bought back, I would have bought in here, but then price quickly turned and went down against me. However, if we look at the 3-day chart, so if we look here from the end of the chart to this red line, that's 1 month. From this red line to that red line, that's another month. From this red line to the beginning of the chart, that's another month. So we have 1, 2, 3 months. So if we go back 3 months, 1, 2, 3, you can see that the longer trend is down. We had across 1, 2, 3, 4. We had 2 months earlier, we had a cross price move down below the slow moving average for Costco. And at some point about 4 or 5 months ago, I realized this with the monthly chart and I implemented the policy that whenever price is below the slow moving average or the fast moving average is below the slow moving average, I do not buy those stocks. If I do buy, I would only buy 1 share or 1 book of shares. And so far, since I've implemented that, it is working to make me a little bit more profitable. But since the majority of my stocks were purchased many months ago, even a year ago, I'm still holding a lot of bags because I ended up making purchases based on the daily cross when I had no other time frame for confirmation. And now that I have other time frames for confirmation, I'm making a little bit more consistent profits in the purchases that I do make. So we'll look at one more. Let's look at gold. Made a little bit of money from gold. Well, this doesn't have a lot of crossovers. So that's not a good example. Let's try CrowdStrike maybe. Well, CrowdStrike doesn't have a lot of crossovers. Let's try CVS. Not a lot of crossovers there. Let's just do a random. Another random. Another random. FedEx. So FedEx isn't the best chart, but it does fulfill the needs of what I'm trying to explain. So if I had bought FedEx back here 3 months ago, price turned around and fell below. The fast moving average went below the slow moving average. So I would have been holding bags. Ultimately, price did come back and then it crossed again. And where it crossed, I would have been able to sell at a profit. But we had this one opportunity where we had, basically a month of downward slide for FedEx where my money wasn't being used. But if we look back here 3 months ago, 1, 2, 3, price was already below the slow moving average on the larger time frame. So I would not have made this purchase based on this information of the fast moving average already below the slow moving average. So if we wait for confirmation on a larger time frame, for in this case, the 3-day chart, we would look back 2 months ago, we had a cross. And if we go back 2 months here, I would have purchased at this cross And with my new strategy, instead of selling all of the stocks that I have, I only sell 25% at this particular cross. So my new strategy, I ignore price action as it falls down below the fast moving average or the slow moving average. And I will wait until we actually have a confirmed cross of the fast moving average below the slow moving average. And instead of selling all of my shares, I will only sell 25%. That way, as in it did here, if price turns back around and goes back up, I still have my original purchase back here instead of the new purchase here. And no longer will I use the daily cross to sell out. I'm going to now implement the daily cross here on the 3-day chart. So until I find a better system, I'm looking to buy stocks for any particular stock only when the monthly chart is above the fast move, or when the fast moving average is above the slow moving average. And somehow I'm going to incorporate the monthly chart as well. This is the quarterly, so this is 3 months. This is 1 month chart, and on the monthly chart, we have price of the fast moving average is below the slow moving average. So I think what I'm going to incorporate, as long as price is actually below the fast moving average, while the fast moving average is below the slow moving average, I won't do any purchases whatsoever, regardless of what the 3-day time frame is doing. So if we look at these candles here, again, this is a month. I'll zoom in. This is a little bit smaller chart. Why isn't this zooming in? There we go. Oop. All right, so this is, we're going to go back 1, 2. So if we go back 3 months all the way back to the beginning of the year, you'll see 1, 2, 3 months time frame again was lower than the slow moving average. I would have looked here 2 months ago to see if this was an opportunity to buy in, and 2 months ago was a confirmed price move above the fast moving average. So I probably might work in the possibility of buying when price is above the fast moving average on the 3-day time frame. Again, I might not have explained that clearly. I'm working through this. I got a tiny little man brain. I'm not Warren Buffett. I'm not Steve Jobs. I'm not Michael Burry. I'm just the day tradester. I'm just a regular guy out here, and I'm making money, and I want to show you that I'm making money, and then by copying some of my trades, if you do choose to copy some of my trades, but more importantly, learn a very basic strategy that it will benefit you, and it will change your life, and you will start to see your future through different lenses. So now let's get started. I need to get to selling some stocks. We do have some stocks to sell. And the first one I'm going to take a look at is Apple, AAPL. So I'm going to try to use this. Well, I don't need to use it on this particular chart. So I'll go back to my day Tradestor chart. All right, so we're looking at Apple. So right now with the strategy that I've implemented, I currently have 4 shares. I'm maxed out on Apple, and I'm waiting to see if we have a confirmed cross. Even though we have price going down, I'm not selling Apple at all yet until we have a confirmed cross. So a confirmed cross would be right here when we had the fast moving average cross below the slow moving average. This is the crossing candle, but I would not have even sold out here with my new strategy because this is not a confirming downward move. We had the crossing candle here, and in order for me to sell, again, only one book or 25% of my shares, I need price lower than the crossing candle. So I would not have even sold any of my stocks with my new strategy. With the old strategy, I would have looked to sell on this particular candle. We had price move below the fast moving average. Then the next day, we had a confirming candle. So I would have sold one book or 25% of my shares here. And then on this candle, crossing below the slow moving average, I would have waited until we had a confirming candle. So it's quite possible that I might have sold when I went to make the video on this particular candle, you can see this bottom wick. If you're new to the video, the top of the wick is the highest point that it reached, and the bottom of the wick is the lowest point that it reached. So if I made my video when price was down here before it moved back up, then I would have sold another 25% of the shares that I own right here. And then I would be buying at a much higher price on this particular candle. So we had the cross here. We had it on this candle. The next day we did not have confirmation. Price moved down. Confirmation price would need to be higher. This was the confirming candle. So I would have sold possibly down here. I would have sold one share here around 255 and bought back in somewhere around 262. So that's $6 per share that I would be buying in on that particular stock. And then if I had sold back here, I would have sold 25% of the shares at 245, and again buying back in at 262. So we'll just say $15. So it's a loss of money, and it's too much buying and selling for an investor. All right, AMD is the next stock. We do have price moving down. It is definitely confirmed. We have $206. Price moved down below the slow moving average back here 4 days ago. 1, 2, 3, 4. And we had confirmation the next day, but I wasn't making videos. This is my first day back to making videos since working on the new strategy and working on my business cards and logo design. So current price is $206. AMD, I will be able to sell 25% of the shares that I own. So one book, I'm maxed out on 4. So I have one share for each book, and I'm going to be able to sell one right now. That's 25% of my shares at $206. And the one that I'm selling, I bought for $186. So that is a $20 profit on that share. Next stock is American Express. Right, so American Express is AXP. We had crossed 3 days ago. We had a confirming candle. However, prices moved back up. So I'm not going to be selling any American Express until we have price move below this crossing candle. The actual crossing candle was, we'll say, so yeah, it was 3 days ago. We had the cross, confirmed cross the next day, 2 days ago, but prices turned back around on us. And I have one share of American Express that I bought for $308. And I'm not maxed out. I currently have 3 shares. My minimum number of shares that I would have for any stock is 4 when I am maxed out. All right, next is EQT. EQT. We do not have price moving down. We do not have the fast moving average moving down below the slow moving average on EQT. Next is gold, GLD. We definitely do not have price moving down yet. So I need to change my triggers. If you're new to my videos, I usually have triggers set, and the triggers were when price fell below the fast moving average or the slow moving average, I would receive an alert saying, hey, you might want to consider selling here. And also on the opposite, buying. Whenever price moved back above the fast moving average or the slow moving average, I would receive an alert on that as well. So I need to change my alerts. IBM, because these alerts are no longer true anymore, since I'm no longer buying and selling as price moves below and above both the fast and slow moving average. I'm only doing it when we have a confirmed cross on the daily chart. We do have a confirmed cross, except price is a little bit higher. So for IBM at 291, I do have a stock that I purchased at 266. So tomorrow when we check IBM, if price is lower, we'll go ahead and sell. Lam Research, LRCX. So there'll be less buying and selling on the swing trading investing style strategy. Lam Research, we clearly have a confirmation. I am not maxed out. With Lam Research, I max out at 40. That would be 10 shares for each book. So I'm going to sell 10 shares at 138.86, or roughly somewhere around there. 138.89, and the Lam Research that I sold, I bought at 112. So we're looking at $26 a share. So that's $260 profit on that. So it makes it $280 total so far. Next on the list is Marriott, MAR. So the videos should be shorter, ultimately, when I get going. And I don't have a lot to babble about. So nothing to do here. I'm no longer selling when price moves below either of the averages. So we're now moving on to QQQ, which is an index for the NASDAQ stocks, or the top 100 NASDAQ stocks. So we clearly have continuation of this particular cross. We're now down to 585, and I will be able to sell. Well, I've already sold one share, and I sold that back here on this particular cross, but I'm going to keep moving forward with this particular strategy, which means I need to take a look at the 3-day chart. So I'm coming to take a look at the 3-day chart, which is Day Tradestor with 4 charts on it. So taking a look at the 3-day chart, yes, well, nope. I need to get rid of box, QQQ. And we do not have price moving down. We do not have the fast moving average moving down below the slow moving average. So we're going to wait for QQQ. When we do have this price move down below the fast moving average, that is a confirmed opportunity with my particular strategy to sell. And I will be selling as long as price doesn't drop down below, let's see, 573 is the least expensive. So we'll take a look at QQQ tomorrow. We'll go back to the Day Tradestor chart. And the next one on the list is SMH. That is an ETF for semiconductors like NVIDIA. SMH. All right, so we do have a confirmed cross. I sold out. I sold 2 shares back here, so I'm not going to be selling. I know the 3-day chart for SMH is not lower than the slow moving average, so I'm just going to move going on over to Snowflake. Snowflake, I currently have 4 shares, and when I'm maxed out, I have 4 shares. So I'm going to hopefully be able to sell at a profit one of these shares, and I will be able to sell one at a profit. I currently have one already sitting in a limit order. So we'll come over here to my active trader, and we'll come down here to 245.30. And I bought one share at we'll just say 241. So that's $4 in profit for that one. So that's everything that I had received on today's alerts. But I did receive alerts yesterday. However, I did not make a trading video yesterday. I made an explanatory video of letting you know why I didn't do any videos the previous 2 weeks. And at the beginning of the video, you saw my business card, my image that I'm hoping to put on mugs and shirts and hats to sell as merchandise. So first stock I need to take a look at is Datadog. This is from yesterday's alerts. So Datadog, I currently have 3 shares. When I'm maxed out, I have 4. We do not have a cross. So I'm looking now to, this is, MU is Micron Technologies. I'm currently maxed out at 8, and we are waiting for a confirmed cross. So here we do have price crossing right now today. Tomorrow, if we have a confirmation candle, let me zoom in here. You see we do have a cross today of the fast moving average below the slow moving average. I do not sell on the cross. I want a confirming candle the next day. Tomorrow when we look, if we have a price is lower than whatever price this candle closes, then I'll be looking to sell some Micron, and I will be selling at a smaller profit than if I had sold back here. But again, I'm not using this strategy to try to make you trade more frequently. I'm hoping that you are inspired to become an investor. So I want to act more like an investor in this particular strategy. The next stock that I want to look at is SoFi, SOFI. So we clearly, I maxed out at SoFi with 72, so I'm already 1 book down, and that was sold back here probably, somewhere around here. So I will be holding SoFi. We'll look at the 3-day chart. And if the 3-day chart is down, it is, nope, that's box. Stay away from box again, SoFi. We do not have a cross We do not have a confirmed cross on the 3-day time frame. We do have a cross on the daily, but we do not have it on the 3-day. It is likely, or it can happen, that price stops and bounces off from where we are now, because we don't want some bulls, they will prevent the fast moving average from crossing below the slow moving average on stocks. You'll see that time and time again. So the next one I have to look at is Ross Stores. This is this is going to earnings this afternoon. So go back to the day Tradestor chart. All right, ROST, Ross Stores. All right, now this is going to earnings. I currently have 3 shares. So when I have any stocks that's going to earnings, I look to sell up to half of the shares that I own. I want to keep at least 2 books. If I'm able to keep 2 books, which is 50% of the total allotted stocks that I would have if I maxed out. I currently only have 3 books. Now each book contains 1 share. So I'm only going to sell 1 because I want to keep at least 2. The only time I will have less than 2 is if I only have 2 shares. If I was going into earnings and I only had 2 shares, I would sell half of those, meaning 1 share. Or in this particular case, I am only selling 1 share because I have 3 total shares and I want to keep the 2. And if that was confusing, I apologize for that. So zooming back in here again. So Ross Stores, and this is regardless. And the reason I want to sell is I want to protect my downside. I would rather make a little bit of money on the upside with 2 shares than lose, if it turns green and it's a great earnings report, then lose 3 shares worth of value on the downside. So current price is 160.77. 2 shares are already higher than this, but I do have 1 share that I bought at 156. So I'm looking to sell 1 share, drop down to 160.72. And from 160.72, from 156, we'll just say that's $5. Excuse me, $4. So that's everything on the sell side. I do have some stocks on the buy side. I currently have $2,800 to work with on the buy side. So let's take a look at ACAM. That is the first stock that I'm going to take a look at on the buy side. This is not a stock that I'm looking to buy. We recently had earnings. I currently have 1 share. So we'll just hold on to that 1 share. I try not to buy shortly after earnings just in case price continues down. So the next stock I want to take a look at is NextEra Energy, NEE. So NextEra Energy on the daily chart, if we look, overall, we're in an uptrend, and the energy sector is pretty much going to be in an uptrend unless the people are accurate and they say we're in an AI bubble and that's about to burst. I'm on the side that it's not actually a bubble. I think it's just a super growth right now. But that's my opinion. And again, tiny little man brain. Again, I'm not Michael Burry. I'm not an expert. But if you look at a lot of the stuff that the experts say, Michael Burry's been wrong just as much as he's been right. So we recently had a cross on the daily moving average. I'm going to go take a look at the 3-day chart. And if the 3-day chart is up, nope, 3-day chart. I keep doing that. Again, this is my first time doing this, so I keep making this simple mistake. So NextEra Energy, on the 3-day chart, the fast-moving average is above the slow-moving average. So that is a good indication. On the monthly chart, we also have a new crossover. Typically on the monthly chart that I've seen, when we do have a crossover, it tends to be a little bit longer run than on the 3-day or the daily chart. So it's a little bit more confirmed of a move. And again, with AI and the energy needs that the whole AI sector is going to need, I am going to buy, even though price is going down. We have on the monthly chart, let me zoom in here. On the monthly chart, we have a cross last month, and we have a confirmed cross here. So I am just going to purchase and max out if I can on NextEra Energy. The current price is $84, and at $84 I purchase at least 8 shares. So I'm going to purchase 8 shares of NextEra Energy. So I find that down here, right click. I want to buy 8 shares, go up to 8. And the current price, I need to look over here on another off screen at NEE, because this isn't always accurate. The price down here isn't always accurate once the market closes. The market just closed a few minutes ago. And NextEra Energy is currently at 84.37. So we'll go back to that. I'll put in 84.37. 84.37. Good to cancel, confirm and send. Okay, we'll move this up a little bit until it sells. 84.40. All right, 84.41 is what we just bought. 8 NextEra Energy. All right, we're going to take a look at NextEra since I'm already on this before I go back to the day trades chart. NextEra is another stock that I'm looking to buy, and everything. We've got the quarterly looking good. We've got the monthly looking good. We've got the 3-day looking great. Everything on this is looking great, so I'm looking to purchase, max out on NextEra. Current price is $225, and I max out on NextEra at 8 shares. So I currently have... how many shares? I currently have 4 shares, so I'm looking to purchase 4 additional shares of NextEra. I'm looking to buy 4 shares. NextEra is, I believe, a health company that basically only works with women's health. Don't know exactly what they do. I don't know everything that every company that I purchase. My interest is mainly buying stocks that are in the S&P 500. So that's where I get my ideas from. That's where I get my stocks from. I'm not investing on anything having to do with any specific depth of knowledge of any company. I'm basically just doing it on how the price action is moving. I'm a price action trader of quality stocks. Investor. Primarily investor, but I do look to trade. Okay, so back to the 4 shares. I need to look again at NextEra, NTRA. Put this over here, NTRA. Current price is right around 225, so we'll see if that's accurate. This is saying almost 230. We'll say 225.48. And it did not go at 225. All right, come on. It's not clicking. All right, so we'll try here. We'll zoom in, go back to the 1 day, 1 minute. All right, I'm on the wrong thing. I need to come to my time frame here. 1 day, 1 minute. All right, I'm gonna go up to 225.66. We'll go up to 226. All right, we'll go to 226.39. Maybe it is 229. All right, it wasn't 229. So we got it for $4 less. We got those 4 shares. So savings of roughly $16 over what was listed down on the ticket at the bottom of the screen. And that is all the purchases I can make. I currently have 3 stocks that if price moves up, I can buy back in on my day trading side. So this money needs to be allocated to those so I can stay maxed out on my day trading side. The videos I'm making is for swing trading and trying to inspire you to be an investor. I day trade all day, every day. I have multiple accounts. I've got 6 or 7 accounts that I do different things in. But again, I'm making these videos to inspire people who do not have a retirement account or who are not profitable because they actually are trying to day trade and they're doing it badly and they're doing it poorly, that they might want to incorporate one retirement income at a future date by saving hopefully $25 a week or whatever they can afford, but also that they can stop being a day trader and see that being an investor is the most likely way that they'll make money in the long run. So I am going to now go back to my afternoon earnings reports. I do not know what time Ross reports. They may have already reported. So let's go ROST for the chart. It looks like they may have already reported their earnings. Let me pull up. Well, not let me. I'm going to pull up Earnings Whispers on the calendar and see if indeed they have reported. It looks like they might have. If we zoom in here, well, let me come back to my day Tradestor chart because you probably can't see that on a smaller screen. So go to the day Tradestor. So Ross Stores, they reported right at 4 o'clock. So we're going to come in here to the 1 day, 1 minute chart and go to ROST, Ross Stores. So right at 4 o'clock is when they reported, and they've gone from 160.91 to currently 165. So again, I'm making money on the 2 shares that I kept, but had it gone down against me, then I was 1 share less or 25% or upwards of 50% less protection from the downside. So I'd rather have money going back into my total account balance to use for stocks that actually go up than risk making all of the gains for all the shares on the upside. So that's it. I'm done for my sells for today. I'm done for my purchases for today. We're going to check the earnings for tomorrow. So here's the heat map. You can see Walmart had a great day. They're the only stock that really had a great day. We had Regeneron. They had a pretty decent day, but Walmart, they had a great day compared to the overall market. Mostly red today, but I was coming in here, take a look at the calendar, and I want to take a look at my total account positions, and I want to see if we have anything going to earnings on Friday. And there's nothing going to earnings on Friday, so I am completely done for all of my activities for today on the swing trading strategy. All right, there's going to be less actions. If you're new to my videos were long, like today's video. We're looking at close to an hour, but that was both the new thing that I'm recording for the $25 a week video for new investors, but also the swing trading strategy. But my videos were typically an hour or more because all of the actions that I was doing. So the videos are going to be much shorter since I'm doing less actions. And once I get my alerts set, I'll have less alerts, so less stocks to look at every day. So I probably will not any longer need the sell order on or sell order off. That probably was confusing to some of you. But my actions for today, and the swing trading strategy for long-term investing, I sold a share of AMD, I sold 10 shares of Lam Research, I sold a share of Snowflake, and for earnings, I sold a share of Ross Stores. I bought 8 shares of NextEra Energy, and I bought 4 shares of Natera. Now, also, I did buy Silver Core Metals Incorporated, bought some stocks there for the $25 a day or $25 a week account. So those are my actions for both accounts that I'm hoping to help and reach people become investors and more profitable traders. So now I'll take a look at my portfolio performance and my realized gains for the day. And here we have $137.51 in realized gains according to Charles Schwab. And now we know that this is not an accurate number. Through my day trading or through my sales today of the shares that we were able to sell, I had roughly $283 in realized gains. And that's just a difference in accounting methods between Charles Schwab and myself. Charles Schwab takes the last in, first out, and I do not sell stocks at a loss. I will locate the stocks if I'm able to sell any in a profit and sell those and put a sell order on those that are higher than the current selling price of what I just sold at a profit when it is time to sell. Now, the portfolio, the last 2 weeks, we've seen roughly a 6% drop in our portfolio balance, or closer to 8% actually. My portfolio is performing at 2.33% compared to the S&P 500 at 3.92% since August 20th. Now, when I open this account, all of the funds and stocks, all of the assets that were in this account were transferred to the new account. But to date, as of August 18th, 2025, that account was performing at 16.26% compared to the S&P 500 at 10.54%, which means that totally my portfolio is 18.59% compared to the S&P 500 at 14.46%, meaning that I'm outperforming the S&P by 4.13%. So if you see that I am underperforming the S&P 500 compared to since August 19th, I was outperforming the S&P 500. The same reason I get to outperform is the same reason that when the markets go down, if I'm holding too many bags, I will go down faster, is because I am not just in the S&P 500, I hold individual stocks. In some stocks, I am overweight, like Chipotle. I have 50 shares of Chipotle Mexican Grill, and that stock is really bringing my portfolio down. But again, like Lamb Research, I had 20 of those. That's significantly overweight from stocks that are priced around the same range. And when the market was going up, that's what was helping us. Now that it's going down, it's really a weight around my neck. But I'm not concerned about it because I'm not interested in the short term. I'm interested in the long term. And Chipotle will eventually outperform again, and Lamb Research and the other stocks that I have significantly more overweight than what is distributed within the S&P 500. And I have no problem based on history that the S&P 500, as usual, will outperform any of the downtrends. The uptrends significantly outperform the downtrends. So that takes care of my performance for the day and year. So I'm going to go ahead and pull up my day Tradestor chart. And we're going to pull up the 1 minute chart. And we'll pull up the chart of the day, 1 day, 1 minute. And we're going to pull up Natera, NTRA. Natera was our best performing stock of the day. It wasn't a great big move, but it was a move up compared to almost every other stock in the market. It went up roughly $7 today, which is 3.3%. Natera, again, is primarily a diagnostics health company for women. They do create some diagnostic tests for men, but it's primarily for women. And now that I'm actually looking at the numbers, Natera went up the most by dollar value. They went up by $7.20. However, Walmart was actually percentage-wise the outperformer for the day. So I made my chart of the day too hastily. I didn't look closely at the numbers. Walmart went up roughly 6.5% of our portfolio, whereas Natera, even though they went up $7, they only went up basically a little over maybe 3.3% total portfolio or total value, stock value. So our chart of the day should actually be Walmart. The chart of the day that I put up is my best performing stock every day. It is not the best performing stock in the market. It is the best performing stock in my portfolio. And the reason I decided to take a closer look is because earlier when we looked at our heat map, Walmart was super bright green compared to every other stock. So I don't know when I don't know how I forgot that when I went to make my chart of the day, but our chart of the day, we're just going to stick with Natera, even though it's actually Walmart. I'm not going to go take the time to fix that for the video. So we'll go back to the 1 year, 1 day, or 3 month, 1 day chart. We go back and see how the S&P 500 ultimately closed today. So today we hit a low that takes us back all the way to September 10th. So we have gone back in value. We've lost over the last 2 weeks. September 10th, which is a little over 2 months of value that we had gained, and that is how the stock market works. If you're new to the market, you're just going to have to learn how to live with that. You're not traders, you're investors. Or at least that's what I'm hoping that you are going to learn to be, is investors and not day traders. Again, this drop is nothing in the long term, in the history of the stock market. There are so many more weeks and months and years that are green and up than are red and down. And with that, I am done for the day, and I hope you all have an absolutely amazing rest of your day.